Good afternoon, this is Brian Split with Allendale, here for your closing commentary for the week ending Friday, November 11th, 2011. And before we talk about the markets at all, I wanted to wish all my fellow veterans a happy Veterans Day. And for my fellow Marines, a happy belated birthday, 236 years of Marine Corps history. Hoorah. Now back to the markets. We did have some mixed trade today. The corn market settling lower. December corn down 7 cents at 638.5. That is down 17 1/4 on the week. The December 12 contract down 8.5 today at 574, and that is down 38 3/4 for the week. We did have the soybeans settle higher today. January beans up 8 cents at 1175.5. That is down 45.5 on the week. We did have the November 12 beans up 6 3/4. Last trade 1192.5 there, and that is down 37.5 on the week. As far as the wheat market, we did have Chicago wheat December contract down 3 1/4 at 616 3/4. That is down 20 cents on the week. The December Kansas City contract up 7 cents at 704. That is down 14 on the week. And the December Minneapolis contract down 11 1/4 today at 934 1/4, and that is still up 10.5 on the week. As far as what the funds did today, they did trade the corn market, selling 3 consecutive sessions in a row. Today they did sell 9,000 contracts. The soybeans broke a streak of lower trade today, finishing higher. The funds did buy 5,000, and overall the funds sold about 2,000 contracts of wheat. But the main thing that seemed to govern trade today, we had some private estimates for acres, and those estimates came out about an hour after the open this morning. We did see an estimate for an increase in corn acres and a decrease in soybean acres from the previous estimate, and that's how the traded the market today, with the market selling corn and buying soybeans. We're also seeing some pressure in corn from concerns about demand. The USDA report did decrease the feed usage category by 100 million bushels. And so we've got some concerns that we're going to see lower demand from the livestock and the poultry producers. But this is corn's first week lower after 5 consecutive weeks of gains. And this is the second consecutive weekly decline in soybean prices. Now, in soybeans, we do have prices very close to the October lows after the September quarterly stock report. So we are seeing some bargain buying down there, market trying to hold support here. And we also had to deal with some unconfirmed rumors that China is in the market looking to buy soybeans. So if they are looking to buy, this is a good area to do it near these lows. But the concern is, what does the chart look like if these lows are given? Other than that, as far as the wheat trade, overall wheat still seems to be following corn. It's stuck in a sideways range just as corn is, and we really overall are seeing more spreading between the exchanges. So today the traders are buying the higher protein varieties and selling the Chicago market. But overall, as far as the grains are concerned, it's been a while since we've had some good export business done. It's been a while since we've had those export sales announced at 8 o'clock in the morning on the news wires, and we need to start seeing some of this demand pick up in order for the market to look positive again. As far as the outside markets, we did have the meat trade mix today. The December hogs in the late Globex trade up 85 at 86.60. February up 85 as well at 88.12. A little bit different story in the cattle. December down 82 at 120.77, while February down 75 at 122.90. And from a big picture perspective, the hogs are oversold, cattle's overbought, and we are seeing a little bit of a correction in that. Thursday's upswing in the wholesale pork prices did provide some support to the hogs as well today in the futures trade. And cattle's been under pressure after we had more of a buy the rumor, sell the fact type reaction to record cash cattle trade earlier in the week. There's also some concerns that the packers will be slowing their slaughter rates to help out their poor margins, so we'll keep an eye on that. As far as the macroeconomics today, it was a positive day. We did have the Dow futures up sharply, currently up about 255 points at 12,110. The S&P futures up about 23 points at 1260.5. Crude oil up roughly $1 right now at 98.78. We are flirting with $100 a barrel for crude oil. And again, it's amazing if you take a look at where crude oil was at the beginning of October, down near $75 a barrel. And with all of this global economic concern, especially centering around the European debt crisis, and we've had crude oil values rally almost $25 a barrel off of their lows. We do have the December options expiring next Wednesday, and we've got very high open interest, combined open interest in calls and puts at the $100 strike price. So wouldn't be surprised to have this market continue to trade firm until option expiration next week and see where we go from there. But if we do have the last trade next Wednesday over $100 a barrel, we're going to have a lot of people long crude oil at $100 a barrel, and a lot of people that thought they had $100 a barrel protected, their protection will expire. And what a good time for this market to look strong and then come back down to earth. So again, that's another market that we're going to be watching here next week. But gold up strong today, up another $30 an ounce, right around $17.89. I've got silver up about 60 cents an ounce at $34.70, and this is partly again driven by a weak dollar, down about 84 today at 77.13. But that is your recap for the week. If you have any questions, please do give us a call at 1-800-2-MARKET. That's 1-800-262-7538. You can also look us up online at www.allendale-inc.com. And again, good luck trading to next week. Thank you.